Welcome back, one and all, to another episode of Listen, Loan, Let's Go. Xavier, you're getting very good at this. I say that every month, but welcome back to another episode.
Thank you. And yes, let's go.
Let's go. Now, today we've got a lot. This is a jam-packed episode. I can't wait to get into it. So just to give the listeners a bit of a rundown, firstly, we're going to hear an interview you conducted with Tom Blackhurst. Do you want to give the listeners what they can expect in that?
Yeah, so there's when you're buying a property, obviously you need to involve a solicitor, a conveyancer. So we're going to talk all things conveyancing, why you need a good one. Is there a difference between a cheap one and not a cheap one? And what are some of the pitfalls that you've got to watch out for when you're buying a property?
Really looking forward to that. And then afterwards, we're doing something a little bit different for the final segment, which, as we say each month, is always our favourite. We're going to lay all your cards on the table. What does that mean? Are we busting myths? How would you describe this?
Yeah, so your home loan's not forever. You might be refinancing, selling, buying something else, but the relationship with your broker should be actually. And so the relationship is better if it's a long-term one, because your broker gets to know you, understand your goals, can lead you through all these steps of life. But to have a good relationship, you need to lay your cards on the table.
Oh, we're looking forward to that. But let's get into the interview with Tom. Welcome back to the next segment of the Listen, Loan, Let's Go podcast. And we can't wait to interview our next guest, who is Tom Blackhurst from Blackhurst Law. One of the highest 5-star reviews on Google of any law firm in Queensland is his claim to fame. But we're going to hear about why. Welcome to the podcast, Tom.
Thank you very much for having me.
So firstly, talk to us a bit about Blackhurst Law. How long have you been doing it? How long has it been established?
So we've been around for about 7 years now. So we originally started off as our business name was My Move Conveyancing, where we were focusing on property law. And then since then, we've grown and expanded, and we've rebranded to Blackhurst Law. We do all sort of wills, estates, commercial law, conveyancing, leasing. So it's been quite a journey.
Awesome.
Yeah, you've grown quite a lot since we've started working together.
Yes.
Which is great to see. Now, I just want to debunk some myths today and let our listeners understand how important what you do is. So I guess the first question is, what does a conveyancer do? What can you do for me as a buyer?
Yes. So, look, whenever you sign a contract for anything, whether it's a lease or a car or a property, you need to have a lawyer review it, because you don't know what you don't know. And the problem is when most of the time things go well and things go right, but when things go wrong, they can go very wrong. And when you're talking about property, hundreds of thousands, sometimes millions of dollars, and a lot of people, as you would probably know, as soon as they buy as much as they can afford, so there's not always lots left over. If things go wrong, it can have material impact to them. So whenever you're signing a contract, you need a lawyer involved. And that's where we come in. There's a lot involved when you're buying property. There's a lot of checks that you need to do. There's a lot of debts that you need to make sure is clear. You need to make sure there's no council issues. You need to make sure the building is sound. There's a lot that goes into it. And what we do is we handle that whole process. So we're involved from start till finish, making sure they do everything they're supposed to be doing on time, meet all of their obligations on time. We handle all of the negotiations, all of the paperwork. We work closely with you as well in order to arrange for the financing and make sure that their bank's ready to settle. And then on the day itself, we attend on their behalf. We pay the seller. We pay out any debts of the seller so it doesn't fall onto the buyer. Yep. And put their name on the title. So we're sort of the project manager, in a sense, of an entire purchase or sale process.
Because the devil's in the detail, right? The fine print is where contracts always come undone.
Yes, exactly.
So we should have that reviewed for sure. I don't think that every buyer understand the exact value. Like, you can get cheap and nasty conveyancing, but can you tell me what's the difference between a lawyer and what we call a conveyancer?
Okay. So a lawyer is what you would think of is a lawyer. They've gone to university, they've got a law degree, they're admitted to the Supreme Court, we're trained in the legal profession, we understand legislation, we understand how that applies to your process.
So you know what you're doing.
Exactly.
Yeah.
What a conveyancer is basically a non-lawyer who does property law. Now look, in all honesty, when everything goes smoothly, because conveyancing can be, conveyancing's a process, and when you follow the process, if everything goes smoothly, the financing checks out, the property's all fine, there's no debts owing, the building's all sound, there's not a huge difference between a lawyer and a conveyancer, because a lot of it's paperwork, a lot of it's advising things. But if the slightest thing goes wrong, you're going to very quickly notice if you've got a conveyancer rather than a lawyer. because the conveyancer cannot operate outside of the standard process. They cannot operate outside the provisions of the contract. They don't know how legislation applies to it because they haven't got that legal training. All they've been taught is what the standard conveyancing process is. And so that's what you have us there for. You don't have us there for when things are all hunky-dory and everything's going nice and smoothly and everything's checking out. You have us there when you need someone to fight for you. You have us there when something goes wrong. And you have us there to protect you so that you know, in one of your largest transactions that you'll ever have, you've got a fighter in your corner.
Yeah, because so a conveyancer is cheap and nasty. It's a little bit like not having insurance in a sense. You're the insurance, right?
Yes.
So because we've seen it before. If a conveyancer misses even something like an adjustment to rates or the water, or it's not paid, that can cost quickly. Even if a lawyer is a little bit more expensive than conveyancer, that difference in price is such a good investment in case something goes wrong.
That's right. And all law firms need to make money. Whether they're a law firm or a conveyancing firm, they all need to make money. And how conveyancing firms make their money, because they are several $100s cheaper than a lawyer, but how they make their money is by taking on more clients. Yeah. So now not only do you have someone that doesn't have the formal legal training that a lawyer has, but you've got someone who's working with more people on more conveyances. And there is a risk that things get missed because a lot of it is repetitious as well. So like any human being, if you keep doing the same thing over and over, you can miss things. And like you say, it can be something as small as they forgot to pay off the council debt.
Yeah.
But I mean, council rates for 6 months can be $1,500.
That's right.
So you've saved a couple of $100s, but you've had someone who is untrained in the legal profession. You've had someone that's cost you $1,500 in unpaid rates. You've got someone who's working with so many clients, they don't answer their phone, they get back to you the next day. Some of these conveyancing firms around at the moment have got 2 business day turnaround times to respond to your email. So if your friend's told you something and you're panicking, you just need a quick 30-second call with your lawyer. With us, you've got my mobile phone number, call me, answer your question, you put at ease. With some of these other conveyancing firms, it's submit an online request, we'll be back to you in 2 days.
Yeah.
You know, so all of this over when it's your largest purchase.
Which comes to me, the question came through, and it was, why should my broker and my solicitor, lawyer work together? Right, so that's... I've got my answer for that, but I think we've been working together for a long time. It makes things a lot smoother in terms of the experience for the buyer. But there are always or often situations where we need to collaborate, right? So I'm thinking, and stop me if I'm wrong, dates move, change. Banks are not always the quickest, and there's situation where we see that often building in pest might not be quite as squeaky clean. So what do we do? What do we do then?
And this is why it is so important that you have your lawyer and your broker on the same page. So we've got a great relationship. We've worked together for years. We've serviced dozens and dozens of clients over those years. And what it means is, so firstly, when you buy a property, there's a lot involved. There's a lot of paperwork. There's a lot of things you've got to do as a buyer. There's no getting around it. So the more that can be taken off of your plate, the smoother it makes the process. And that's why, you know, for example, your staff, when they need a copy of the contract, they need a title search, they need the certificate of currency from the body corporate. You're not bothering the buyer with that stuff. You're contacting me. I'm able to get things to you faster than the buyer can. And also we're looking better to our buyers as well because they're not having to get all of this additional paperwork. So that's a sort of simple procedural thing. But yeah, when things go wrong, you know, banks are not accepting the booking because someone at the bank's not doing what they're supposed to be doing. When there's an issue with the funds that they've uploaded, because you might have borrowed 800, but they've only put 650 in the workspace. Rather than concerning the buyer with that, I would just call your office and say, look, we're a bit short here. Is this what you guys have applied for? And you can say, no, that's meant to be 800. Leave it with me. You've got contacts at the bank. We've got contacts with their settlement agents. And with your staff calling the bank and we're calling the settlement agents, things get solved in half an hour, 40 minutes.
Correct, yeah.
When your lawyer and your broker aren't on the same page, there can be a lot of buck passing, which is one thing that got on my nerves when we started doing conveyancing. Was everyone seems to blame everyone else, and I said, I just want to we're all on the same team here. We all want this property to settle for this buyer. Let's work together.
Yeah. So what we want is our buyer to go, that was easy. Maybe it wasn't, but they need to see that.
Whenever a conveyance goes through, the feedback I want is that was easier than I thought it would be. That's the biggest feedback I could get.
Exactly, and often a great advantage for a buyer is, say we ran out of time. So we get that often, you know, we have a finance clause. We'll talk about that magic clause in the contract in a minute, but If we ran out of time, what I find is when we work with you versus an unknown solicitor is we can negotiate that. We need another day or two. We can convey to the vendor the real estate agent why we just a little bit short, where we're at, how it goes. You can talk to the vendor solicitor. We can talk to the agent and the buyers. Things tend to go fairly smooth.
Yep.
We can buy a couple extra days, save the property purchase. So I think those are key points for us.
Exactly, because if you can't meet the finance on time for whatever reason, the sellers start getting a bit anxious because they go, oh, why can't he do it? Is it because he can't afford it? Is whatever it is. Again, the relationship that we've got and that I've got with your staff, we all have each other's mobile numbers. It can be text messaging, it can be calling each other on the mobile phone, it can be emailing each other. It's a much smoother, we need an extension, here's the background, that gives me some context, I can call the client and then I can action that straight away. And even that is... the buyer doesn't even, he's not involved in that at all.
It's communication.
Exactly. So he's not even involved and he says, oh, you guys seem to have already handled it. Yeah, go away. And then I can go and request the extension for it.
Everyone on the same team, right?
Yeah, exactly right.
Cool, excellent. Now, I wanted to ask you about the 7-14-30 rule.
Yes.
Right, so often get first-home buyers are one of them, but even people who buy another property, they don't do that every day.
Yes.
So what's the 7-40-30 rule for Queensland purchases?
Okay, so in Queensland, we have time is of the essence that applies to our contract. So what that means is each obligation that you have under the contract has a strict due date, and you have to meet your obligation by that due date or you're in breach of contract. So when it comes to those timeframes, the standard is you have 7 days to get a building and pest inspection done on the property and make sure that it's structurally sound and to building code, there's no safety hazards, no termite issues, that sort of thing. You normally have 14 days to get your finance approved, and that's an unconditional approval. So that's not only the servicing that you do, it's also the valuation checks out and the bank is ready to loan the money. And then you've got 30 days to actually pay the seller, to do the settlement where you pay the seller the balance purchase price and the title is transferred to you. So that's the general industry timeframes.
Now, this is not compulsory, right? But it's the usual way a contract gets written. Is that correct?
Oh yeah, that's right. It's completely up to negotiation. You could have a 120-day finance clause, which I'm sure you guys would love, instead of the 14 you get. But at the end of the day, you're in a private market, so you need to be as competitive as you can.
Correct.
And so your first time buyers in particular will say, oh, I've got this offer form, and it just says building and pest date. How long? Well, how long? Well, the standard time frame is 7 days for building and pest, 14 days for finance, 30 days for settlement.
That's right. And so sometimes you can go a little bit outside of that, but if you're too far out, you might lose your competitive edge.
You look less competitive because someone else out there is probably offering 7, 14, 30.
Yeah,
But there can be all sorts of circumstances, and you can explain this to sellers as well. If they're in an area where the building inspector simply can't get there within 7 days, you can get 10, sometimes 14. Yeah. If you're an SMSF or you've got some unique sort of self-employed loan, you as the broker say, look, 14 days just not going to happen.
Yeah, and so we can guide buyers on that if they're not sure whether it was from your end or our end. We sing the same song. I think it's important for our listeners to understand what a normal contract looks like.
Yep.
I'm thinking, I was having a conversation last week, and these buyers are from England originally. They moved here 12 months ago, and they called me because they want to buy a house in 6 months. And I said, do you guys understand though, like the 7, 14, 30 rule, Queensland, blah, blah, blah. And they went, oh, wow. Like, the reason I mentioned it is I've been to England before. I know it takes 6 or 8 months to buy a property over there. So they're calling me with that in mind.
Yes.
So I thought it'd be interesting to show our listeners how it happens in Queensland, because even if you come from New South Wales or anywhere else in the country, the rules are different.
And a lot of feedback that I get is people, because you look for a property, they contact you months in advance, they get their pre-approval, now they go out and look for properties, there's several months of looking for properties, and then once an offer is accepted, it does, they go, oh, now everything's happening. Because now it's, okay, in a week, it's a Thursday, next Thursday you're building a pest is due. And they're like, oh, so they've got to start calling people on the Friday and the Saturday, and they feel like it goes quick. And it does, in a sense, but also we're all used to dealing with those timeframes. So we've got processes, our systems, everything that we do is built around meeting those timeframes. So it may feel quick, and in many ways it is, but it is the standard, it is the what we all work around.
Perfect. Now, there's another clause in Queensland contracts that always annoyed me greatly because it doesn't get talked about. Let me ask you, I'm sure that most people actually, what if I ask you, Dan?
Uh-oh.
And you seem to
The
be
guinea
a
pig.
representation of the general population.
Yes, thank you.
You're the average Joe.
Yeah, thank you. Thanks, Don. Appreciate that.
The average Dan. So imagine you sign a contract for a property, right? So there's a property around the corner. You've signed a contract. Now you're going to organize your finance and see if we can actually do it. Who is responsible for that property? Let's say tomorrow there's a fire.
Yeah.
That's a good question.
Yeah, it's a very good question, Xavier. You've absolutely stumped me. Yeah, I would have thought, yeah, probably me.
Well, it is actually.
Yeah.
It shouldn't be. It should be left to the vendor until the day you actually buy.
Yeah.
But am I right to say, Tom, that's not the case?
Yeah, so in Queensland contracts, the way the standard clause work, it says that the risk in the property passes to the buyer on 5 p.m. on the business day after the contract date. What does that mean in English? If you sign a contract on Tuesday, that's the contract date. At 5:01 on Wednesday, the house burns down. You as the buyer are responsible. Now, when we say responsible, the seller has an obligation under the contract to use the property reasonably. So if the seller kicks a hole in the wall, they can't say, at your risk, you have to fix up the hole. They've used the property unreasonably, they've got to fix it. But let's say, for example, what's just happened on the Gold Coast with all of these storms over the Christmas break, because this
Big
took
tornado come through,
This
yeah.
was a lot of my first week back was damage to properties, and now buyers saying, well, fix it up.
So I've signed a contract just before New Year. I don't have my finance yet. The tornado come through, and I'm responsible for that?
Yeah, but I mean, that would be a good situation because if they weren't happy, they could pull the pin under finance. What the concern was for a lot of buyers, they've gone unconditional before Christmas.
Right.
They're due to settle on the 10th of January, and they call me on the 8th and say the house hasn't got a roof anymore. Right? Get the seller to fix the roof. Seller doesn't have to fix the roof. If damage is done to a property that is not the seller's fault acting reasonably, then the buyer cannot claim that back from the seller. So that's why the first thing that we say to buyers, the first thing you have to do, we've got a long checklist of all the things you've got to do over the next month. The first thing you have to do is get insurance on that property.
Get insurance on that.
Get insurance. And there's a lot of insurers around that will give you 30 days complimentary. So sometimes it doesn't even cost you anything. But it's so important to have the insurance because for those buyers that had insurance on properties that were affected with these storms over the Christmas break, it sucks. It's going to take time, but they're protected. But there were buyers that didn't take out insurance because why am I taking out insurance? I don't even own the property yet.
I don't even know if I can buy it yet.
Exactly. You explain to them the risk in the past. Oh, I should be right. And now they're being forced to settle on properties that don't have a roof or have significant damage or whatever it is, or the tree's gone through the carport. They can't claim it from the seller, and they haven't got the money to fix it.
And they don't have insurance.
Exactly, and they don't have insurance. So it's crucial.
So that's a massive, huge tip. In Queensland, you sign a contract, you get insurance.
Yes.
And we help all our borrowers do that. So we've got a concierge service. I'm sure you speak to them about that as well. But
absolutely.
You haven't bought the property yet. We get that, but you still need to insure it.
Yeah. 100%. And as you know, and you would explain to them as well, they've got to get insurance anyway in order to be able to settle, because a bank's not going to settle on a property that's not insured anyway. So you've got to get insurance for your settlement anyway, and you may as well take it out at the start to protect yourself during the course of that conveyance, because it's not just these massive storms; it can be anything. We had one property, for example, in Ipswich last year. Buyer goes unconditional. 2 weeks goes by. We're doing all of our checks. Pre-settlement inspection, which is just for your viewers, you get an inspection a day or two before the settlement just to make sure that the property has been reasonably maintained and is in the same condition it was at the contract date. So the buyer goes out there to do their pre-settlement inspection, and the windows are smashed, and they go inside, tiles are smashed, or the cupboards are ripped off because the place was robbed. Right. And that is another situation. It's not the seller's fault because the seller locked up the house. The house was advertised as vacant. It's not their fault. No reasonable action from the seller could have prevented, or further reasonable action from the seller could have prevented the robbery. And the buyer asked me, what can we do? Tiles are smashed, holes in the roof, cupboards ripped off. The answer was, claim on your insurance policy. That's what it's for. So we're not even talking about natural disasters. We're talking about any damage to the property that's outside of the seller's reasonable control, you as the buyer are responsible for. So that's why it's critical to get insurance.
Yeah, no, definitely. And that's something we see too many people in contracts with no insurance.
Yeah.
Yes, we do have to ask to settle, but it's already a few weeks late. There's a lot of risk going on there.
Yep.
Something else that I wanted to ask you today, we see a lot of purchase off the plan in Queensland.
Yep.
And in true fashion, developers tend to add time, so it's supposed to be by November 22, and then it moves to February 23, and then July, and then September, and then we're in 24, and they're still waiting for their property.
Yeah.
We had a buyers only a couple of weeks ago wanted to pull out because this is taking forever. So what are the options generally? You bought a property over the plan a year or two ago. You don't want to complete now. What do we do?
Yeah, so again, just for the viewers, so an existing house, a house that already exists or a block of land that already exists, we've got standard residential contracts that apply in Queensland. They're used in 90% of transactions. They're issued by the REIQ, which is the Real Estate Institute. It's got all these standard terms. I've basically memorised them because they haven't changed much in the last 10 years. But when it comes to off the plan, which is a house and land package or a block of land in a development or a new apartment in a high rise, we call all these off the plan because you're not buying an existing property, you're buying something that doesn't exist yet. You're buying it off of a survey plan.
The only way you can see
showed.
it is on a plan until it gets built. Yeah.
Exactly. Each development has its own unique contract, and it's vastly different to the REIQ contract. The contracts are anywhere from 50 to 200 pages long.
So full custom here.
Complete custom. And it's not even like, if I buy a Sunland development, I've bought in a Sunland before, there's a different contract for every development that each developer does. So when it comes to these contracts, it's critical that we're involved to review it for you, because by nature of the off the plan, they're already heavily one-sided to the developer. And we know that, and that's fine. And the reason why it's so one-sided towards the developer is because the risk to the developer is far outweighs the risk to you. So the contract is worded that way, but sometimes they go too far, and that's the sort of people you see on a current affair that have lost their deposit, they've done nothing wrong. So off the plan contracts can be a bit...
Because you can, and so the biggest tip is you need to get Tom to review the contract before you do anything.
Yes.
Some of the potential outcomes could be loss of deposit.
Yes.
Can you get sued?
Absolutely.
You could get sued.
And more than that, you would hope you only lose your deposit. You're talking deposit, interest, damages, expenses, marketing costs, commission. If they resell to someone else, you have to, and for less than what you paid for it, you have to pay the difference. It goes on and on and on.
So it's pretty risky, right? Because we get a lot of people tend to say to us, "Oh, don't worry, we'll just resell it before settlement." And obviously, with the market that's been the last few years, they might have bought a property for 600 and it's now worth $1 million. They think we'll just make that 400, but they can't always do that, can they?
No. Firstly, you can't sell before settlement unless you get the permission of the developer. And not all developers give that permission because it adds a level of complexity for them. And particularly, say, in a high-rise building when they've got anywhere from 80 to a couple of hundred apartments settling, the more out of sync each of the conveyances are, the sort of more difficult it becomes for the developer. So they like to just say, no, that's the buyer, so they won't let you resell. But I suppose to get back to your question about these settlement dates, because I sort of said it's relatively one-sided, and that comes to the settlement as well. So in a standard contract, settlement's 30 days. In these off the plans, they give themselves anywhere from 18 months all the way up to in some high-rise buildings, 5 years to be able to settle. And so this is another risk to people who are buying off the plan. So they sign a contract for a high-rise in Broadbeach. They've got a 14-day finance clause. They come to you, you get their finance approved, happy days. It doesn't settle for 4 years.
Correct.
Okay, so they've satisfied their finance condition, they're locked in. The biggest risk to them is that in that intervening 4 years, if their personal situation's changed, they get a new job, they get a loss of income, they have a credit card debt, they buy a couple of cars, they have a few kids, this can affect servicing. And there's no ability to pull out of the contract if it's in the 4th year and you can't get your finance.
Correct. So we won't do a finance approval for an off the plan. And I'll qualify that because in line with what you say, we see a lot of developers trying to fool buyers saying, well, get your finance approved and you can buy this, we'll sell in 3 years. But no one explains to the buyer that that finance approval is worthless.
Yeah.
Because it's going to expire. So false hopes, we don't want to do that.
Mm-hmm.
So we refuse to do finance that's going to expire, be useless in a few years' time, for sure.
Yeah, and that's what we say to the people. We say before you sign, so we'll go through all the legals, make sure the legality's fine, they're comfortable with it all, and all those sorts of things, because there are a lot of differences between the off-the-plan and the REIQ, so we explain those. And then we say, now, before you sign it, go and talk to your broker. At least get a servicing done, at least get some level of comfort, build in a buffer. So if you can only just afford this property now, in the next 3 years, a credit card, a car, and a kid, you're not going to be able to afford it anymore. So you need to have a buffer.
So buying off the plan's a big gamble. It can go really well or really badly, and there's not really anything in between.
No, and there's no mitigation. It's just you have to talk to me and your lawyer about what the risk is, what the risks are.
Yeah.
Talk to your broker about having a buffer and making sure that if circumstances change, it's not going to affect you too much. And then you take it on and hopefully it all goes well. And look, it generally does, but it's just like I said at the start, when things go wrong in property, given the amount of money that's involved, they go really wrong.
Yeah.
It's been unbelievable information, Tom. We really appreciate everything you've shared. I've learned a lot just listening to you guys chat. How do we get in contact with you for the listeners and the viewers? And what's the best way to contact you?
Perfect. So look, if you want to get in contact, I'm Tom Blackhurst from Blackhurst Law. You can look us up on Google. We've got one of the highest 5-star reviews in Queensland on Google. So it's black as in the colour, HURST Law. And just give us a call. We're more than happy to help. For all of Xavier's clients, we offer free pre-signing contract reviews, so it doesn't cost anyone to get a contract reviewed. We've got 3 business hour guaranteed turnaround time. So if they give us a contract at 2 o'clock, they'll have it back to them reviewed and ready to go at 5 o'clock.
Wow.
So there are a lot of things that we do to go above and beyond for people, and we work around people. So we don't just do all the things you would expect, the advice, the guidance and the paperwork. All of my clients have my personal mobile phone number, every one of them, because it's a significant purchase. And if you can only get a hold of me from 9 to 5 on the office line, it can add anxiety. So you've got my mobile number. You can text me, you can call me. Outside of business hours, I'm available when there's things that are urgent. And we work around people. If they don't understand an email we've sent, if they need help completing a form, if we send them out a DocuSign, but there's some people that, given the size of the purchase, they want to come in and put a face to the name. They want to sign it in front of you. They can come into the office. There's no extra costs. And it's all just to serve people and make what should be an exciting process as smooth as possible.
Awesome. Well, we really appreciate you being so open, sharing so much information with us all, and appreciate you joining us on the Listen, Loan, Let's Go podcast.
Good on you, mate. Thank you very much for having us.
Thank you so much, Tom.
Thanks, Xavier.
Now, you said this off the top, Xavier. Your home loan is not forever, but the relationship with your broker should be.
Yes.
Do you want to just quickly bring everyone back up to speed with that?
Yeah, sure. The life, when it goes through, has got multiple usual steps, right? From and I guess you buy your first home, then you might upgrade to your next one. You have kids, you help them. Eventually, you might buy some investment properties, grow a portfolio, and then retire. So we can be along that story on your side for the whole length of it. And if you get a good broker that follows you all through that story, then you're going to get a better result, right? So that's one thing. We're not transactional. When you go to a bank, you go there to get a home loan, and then you're left with day-to-day banking. That's great. When you come to a broker, we talk about strategies and future goals and plans, and trying to not only maintain a competitive rate mortgage, but also it's suitable to your goals. Because, I always say, you make plans, then life happens.
Yeah.
Well, we want to be there when life happens.
Well, that goes all the way back to the very first episode we recorded, where you guys were talking about some relationships you have with clients. It even goes into watching their kids grow up. Correct. And then they're getting to the age where their kids are ready to buy their first home, which is really exciting. Now, we're going to talk here about laying all your cards on the table, especially when talking to a broker. What does that mean before we go through probably the subcategories?
Yeah, so when you apply direct to a bank, there's such a thing as what we call TMI, too much information.
Yeah.
It's like when you talk to an insurance company, careful what you say.
I think I have that problem in everyday life.
When you come to your broker, there's no such thing. Actually, the more we know, the better, because we've got access to 60 lenders, and their policies are all different. So if we have all the cars, we know which one to present, which one to play with. If that makes sense.
Sure.
Some people still think out there that if they hide a couple of things or not quite say or not tell or tell later, it's going to be better. It's not. Things like that credit card that's been in the drawer for 5 years you haven't used, we need to know about that.
Yeah.
Those mishaps you had paying the mortgage or the car loan, we also need to know about that. So the more you tell us, the better we can prepare and the more successful we'll have an application.
A question without notice has just popped into my mind with another mortgage broker I was talking to once, and they were basically saying that a lot of one of the barriers people fear when talking to a mortgage broker is they're afraid of, say, the $5 multi they put on Sportsbet during the week and what the broker might say or think about that. Can you debunk that kind of thinking for us?
Yeah, sure, definitely. And we see it all the time. It's better we know and the bank doesn't than we don't know and the bank finds out.
Yeah. Okay.
Right? So if you've got that TAB Sportsbet special, fun day, Sunday gambling account, tell us about that, because we need to make sure we go to a bank that won't ask for those statements, if that might be an issue. Now, if you put a punt on the horses once a Sunday and it's for $3-4, who cares?
Yeah.
If you spend $5,000 a month on the TAB, we're going to start having a conversation about maybe where that leads to, but we're not judgmental. The bank would be, right?
Okay.
So to be able to, and I think we've mentioned this in episodes before, we're going to put you in a nice little package that the bank's going to like, right? If we don't know about that extra ingredient that's going to pop up later, the bank's got to find out, then it's no longer a neat little package.
Sure.
Right? So put your cards on the table, tell us where the problems could be, and then we can be a step in front.
I love it. Now, it says here too, people think that going to a broker is like going to a department store and trying on different styles of brands. So the window shopping effect, do you see that quite often?
No window shopping when it comes to home loans. You can't do that. And what I mean by that is every application that you lodge, whether it was for a home loan, a credit card, a car loan, even for a mobile phone account, that ends up on your credit file. So imagine that you want to get a home loan, you go see 2 banks and 3 brokers, and everyone lodges an application. They're all going to end up on your credit file. Everyone's going to know that you're shopping, and banks don't like shoppers. So the way we do it is we assess your situation. When we're sure, then we go to that one bank, because we're sure you're going to get approved. We know you're going to like the rate and the service and everything that comes with it. So we need to do it in reverse, right? But what we find sometimes is that people don't tell us. They come to us, get us to do the work and analyze it all, but they've also got another broker or two or a bank looking at it. And if we don't know that's happening, we could do damage to the credit file. We could put ourselves in a situation where, if you pick one horse, you get the win, but if you pick 5, they all lose. Does that make sense?
Absolutely.
So to take your TAB analogy.
Great. Now I'm the gambling addict here. Well, speaking of that, I mean, we talked about that. You've got skeletons in the closet here, but probably a bit more serious in terms of repayment history, personal loans, that kind of stuff. What does that kind of mean? Yeah,
so again, some people sometimes are a bit concerned. I might not tell my broker that, hey, I went bankrupt 3 years ago, or I had a card, I was always late, but that's fine, I closed it, so no one will see that. We'll still see those things, and it's better to line up front, and we know there's an issue. Firstly, because if the issue going to end up with we can't help you, might as well get that answer out straight away, but mainly because more than often we can get around it. We need to know that it's there to be able to get around it in the first place, right? So, skeletons in the closet, it's not a good idea.
And what about clear objections and goals?
Yeah, so we need to understand what you're trying to do. to get the best result. Whether it was a long-term solution or a short-term solution, it can affect what we do. And what brings to mind here is the flippers.
Yes.
So we sometimes get someone go, yeah, we want to buy an investment property, but really what they want to do is buy it, renovate it, sell it, right? That has an effect. It has an effect on how the bank might see them later. It does have an effect on us as well. So, and this is maybe more of a selfish one, but we get paid from the bank when a loan settles. But if the loan disappears within 12 to 18 months, then the bank takes the money back.
Right. Okay.
Now, we've had this before, clients not realizing that this happened, telling us they want to buy an investment property, but really they renovate, flip it, sell it, make $100,000 or $200,000, and then come back and say, hey, we want to do that again. We want to buy another one. And we go, well, do you understand we're actually not making money here? We can't keep doing this sustainably. Now, there are ways and there are banks that enable this to happen in a more seamless way where everyone gets looked after. So it's about lining up the goals. So another goal could be where someone tells us they want to buy an investment property, but really they're going to move into it. The other misalignment could be, well, give me an approval for 600, but really I'm going to spend 7. Well, we can't do that. So we need to understand the actual goals so that we can craft a strategy that's going to be suitable.
Yeah, makes sense. So what do I need from my broker prior to an auction?
The auction word. Don't we love the auction word? So we've covered with Tom something very interesting, the 17-40-30 rule, which is very much the Queensland normal. Auctions is not. So auctions are very popular in Sydney and the whole of New South Wales because that's how it works over there. In some areas of Melbourne as well.
Yes.
It's getting more popular in Queensland, but the reason that auction is tricky is because when you go to auction, if you're the winning bidder, you bought it. That's it. And people go, yeah, but what if I can't get my finance? Doesn't matter. You bought it anyway. And so you could fall into a situation where now you bought a property and you can't actually complete. What do we do to try and help? We would suggest to get a pre-approval.
Okay.
So you might go, well, we want to buy this property at auction. We're happy to bid up to $1 million. We need to have a loan in place that'll enable you to do that, right?
Sure.
And we're going to take it as close as possible to you being totally safe.
Okay.
But what we can't do is make sure that the bank's going to like that property at that price, right? So we can't guess before you go to auction how much you're going to pay, right? And if you're going to be the winner. So when you go to auction, we have to do that after you bought it. And there's the element of risk, is that you commit before we can be 100% sure that you can buy it.
Yeah.
Before the auction, we're probably 90 or 95% sure it's going to be okay, but we can't be 100% sure. And so that's why I want to stress with the auction buyers, we cannot be 100% sure. We'll take it as close to it as we can, but there's still an element of risk there.
Makes total sense. And finally on this list is budgeting and day-to-day banking. How do you see your financial accounts?
Yeah, so there are ways to interact with your mortgage and maybe even pay it off faster, depending on how you manage your budgeting. And everybody loves budgeting, right? Yay, let's do some budgeting. So we always talk to our buyers about using offset accounts and maybe multiple offset accounts and doing a budget for dummy. Right, sure. And I'll put myself in that bag. I like a budget for dummy because it means I don't have to think on a Monday or a Thursday when I've got to fill up the car if there's enough. How much can I put in the car? Can I fill it up, or can I only put $50 in there? What was the budget saying? This is why people are lazy with budgeting, because you have to count, and people are not being counted. So we'd like to talk about a day-to-day banking system that's going to help you track that, going to help you pay your mortgage off faster.
As always, we never leave one of these podcasts without learning some significant stuff. So thank you so much, Xavier. Again, what an episode this was. There's so much information.
Yes.
We've got a great interview. We've laid our cards on the table, which is lovely. But of course, for the listeners, the viewers, how do we get in contact with you?
Well, Best Mortgage Broker Gold Coast, just Google it. You can also visit our website, send us an email or give us a call.
And if you've got any questions for Xavier, as always, make sure you write them into the email in the show notes. But apart from that, that's another episode done and dusted. Well done.
Thank you so much.
And we'll see you next time.
See you next time.